Welcome back to another video. Today we're going to do a stock analysis on Coinbase. We're going to go over what's been going on with Coinbase stock. It's been free fall, go over their Q1 preliminary results, and stay to the end of the video where I'm going to discuss whether to invest in Coinbase stock or there's better alternatives out there. So let's get started in this video. So the stock has been in free fall. The company went public in mid-April and it opened at $381, spiked up in the first hour or so to $430, and since then it's really just came all the way back down, has dropped about 30%, and at the time of this video it's trading around $263. But this is just a warning for people who have invested in IPOs and companies coming public that generally, from academic and anecdotal evidence, it's really hard to not buy into the hype, but you really got not buy into the hype, because what you're seeing is it happened with right now. Obviously growth stocks are all coming down, but we've seen this before with Facebook's IPO, with Snapchat's IPO, with all of even the companies that recently have came public, C3.ai, DoorDash. There's very few companies that when you buy on the opening day that you're going to get a really good return, even in the long term. Generally you want to wait out the period, wait for the insiders and institutions that want to get out of the company, wait for them to sell the stock, and you're going to get a much better price. The very few companies that really has done well is Palantir on its direct listing. That didn't really pop that much on the first day. It only went up around 10%. So different scenario, and each company is different. We have to look at the difference between pricing a stock and valuing a stock. The value of a stock is coming from discounting their future cash flows to the present, whereas pricing, there's hype involved. People are just looking at technical analysis, different things to price a stock. So we want to generate alpha and avoid a situation where we buy the company on its first day and then bam, we lost 30% right now. And so I get a lot of requests on what I think about Coinbase and whether to hold on to this company or whether to get in. Some people haven't gotten in, and so this is the performance of Coinbase the last 2 weeks, and it's been painful for the people who bought on the first day. So let's just give an overview of Coinbase in their S1, their income statement, and really just look at how the revenue structure and their expenses, go over some of the performance metrics and KPIs to really look at for this company. So between 2020 and 2019, the company had 140% revenue growth. The company broke over $1.2 billion in revenue last year. It's profitable, has about 32% operating margin. The one thing you want to keep in mind of is net revenue, which is mostly transactional revenue, accounts for more than 85% of their total revenue. So that is a key risk that I'm going to highlight later in this video. In context, Bitcoin last year performed over 300% if you just held Bitcoin, the asset, and Ethereum went up over 450%. So there's a question to be held on. Even though revenue for the company went up, is it more beneficial for investors to own crypto or to own this company? And that's what we want to answer in this video. So the company went direct listing. They're highly profitable, made $1.58 for last year. So the company is profitable, but it's just what price are we willing to pay for this company? And it's a very volatile company because the earnings of this company is highly correlated right now with the movement of these cryptocurrencies. How do investors and Wall Street really value this company is really difficult. And what we learned from their preliminary Q1 report is they added 13 million verified users, went from 43 million users at the end of 2020 to 56 million at the end of Q1. They have about 6.1 million monthly transacting users. This is their metric that they're using as guidance going forward on how they are building out their top line revenue, is how many users are transacting, because the biggest key for Coinbase is the volume of crypto that's being traded on the platform. They're guiding between about 4 million MTUs to around 7 million MTUs. And they have right now about 11.3% of the crypto market share. That's a key point. I think that is, some say that the crypto market share is going to increase, others say it will decrease, and we're going to go through all of the scenarios. In Q1, the trading volume was $335 billion. For context, in all of 2020, they had $193 billion. So their volume has really jumped in just one quarter. But you have to remember, Bitcoin's price also doubled in Q1. Bitcoin's price started out this year at $29,000, and it pretty much doubled to $58,000 at the end of Q1. So, and right now it's been hovering around that price since then. So price has stabilized a bit. So total revenue was $1.8 billion. Their net income was around $800 million. So this is a really great quarter, right? And people, if you just look at this one quarter, you say, wow, this stock is definitely one that somebody needs to own. But the view really is this sustainable? Is this sustainable going forward? And in the long term, can investors see a viable path where they can keep this revenue and the top and bottom line can hold on to these numbers? One thing that is key about Coinbase is their shift between retail to institutions. This is going to be key for the company going forward. I think that Coinbase's management also knows that they need to diversify from just transactional fees that they're collecting when people are trading crypto. And so between 2018 to the end of 2020, their institutional volume has really picked up, and they're going to rely less on retail investors. So they're going off of, they don't want to become like a Robinhood, I believe, right? Robinhood has a free model for retail investors, but they've gotten into controversy on the business structure. And if crypto matures and the transactional fees is slowly dwindling down, I don't think they want to be in a situation where they just focus on retail and go the way of retail brokerages. So they want institutions, they want to help them store that, have data, provide data, subscription models to institutions, and hopefully they can have more sustainable power with institutions. So that's where they're going as a company. And this is also mentioned in their S1, right? The transactional revenue, they want to see that over time, when crypto matures, there's less correlation between Bitcoin's price and volatility with trading volume. And they can hopefully have a more sustainable transactional revenue to build out their transactional revenue. And they want to focus on subscription and services, both on the retail and institutional side. One key point is Coinbase Pro. That's going to be a huge part going forward if they want to get more users onto that. And they have 4 ways of subscription and services provided. Staking, I highlighted that as maybe a key point going forward of the company. That's something that they will really want to take a look at. And other revenue is going to be a huge key of this company going forward. That accounted less than 11% of total revenue in 2020. And that's pretty much where they are owning the crypto assets, and they're executing pretty much their own crypto for people who are selling crypto or somebody is buying crypto, they're taking it out off of their balance sheet. So that's something to keep in mind of. I suspect the company is going to have a vastly different composition of their top line revenue in the future. Their transactional revenue is going to decrease over the next couple of years, and then other types of revenue streams are hopefully going to I want to say supplement, but also in some ways replace their transactional revenue. It's just to what extent that they can do that, and that's really hard for Wall Street right now to model out. So in the bear case of this company, you can see one where crypto assets tank like in 2017. That would be devastating for the company, obviously. And another key point is, even if Bitcoin, you have a bullish view on Bitcoin, maybe the spread and transactional fees go down, like what happened to the brokerage firms. And when that goes down, then the transactional fees that Coinbase is able to collect is also going down. So that's a huge key component in the bear case. Is even if you have a great view on crypto, it does not necessarily mean that Coinbase is able to fully capture that, right? And we looked at their 2020 income statement, where I showed that the assets actually have increased higher than their top line revenue. And another thing is the institutional adoption does not materialize. That's a key point going forward, because institutional part is going to take a huge part of the future prospect of Coinbase. On the bull side, you have something where more institutions are coming onto Coinbase, using their services, information. They can build out a data subscription service for institutions, storage, a lot of different ways to get institutions and provide supplemental services for these institutions. And you already kind of see that happening. So they get that with their first mover advantage. Trading volume is able to somewhat stabilize with the crypto markets when they mature, and they're able to still take fees, even if it's lower than where it is now. They are able to get a good amount of fees from transactional revenue, and other revenues pick up, right? That's the key point, is other revenue streams are able to pick up substantially, and they can have a viable way going forward for this company. So in conclusion, and how we value this company is, it's really hard to build out a DCF and say, here's the bull bear case for this company. I don't think there's really a good way to accurately value Coinbase at this moment. You can build out models, but they're not going to be very accurate. And even the company right now is not really sure how revenue is looking even to the back half of this year. They're not very sure. It's so hard to build out a model for this company. And Coinbase is so heavily correlated to Bitcoin and Ethereum, these two assets. They were trying to lean off of that, but the majority of their revenue is coming from the trading volume and trading fees that they get from that. So we have a underperform rating on this company. Our target price is we won't pay more than $200 a share for this company. That represents around $50 billion market cap for Coinbase. And even at that price, I think it's very rich. A lot of investors, I think, are going to look at Coinbase and say, if I'm bullish on crypto, why not let's buy Bitcoin, let's buy Ethereum directly. You're going to get a much higher return. If it performs well, you get a higher return. If it doesn't perform well, you may get a worse return than Coinbase, but holding that asset directly is something that is a much better alternative, in my opinion, to play the crypto space. And there's also the other brokerages out there. I know there's Voyager out there that's on the OTC markets right now. And, I think this may be a more controversial view, but I have a underperform on Coinbase. And I think this company going forward is going to have some challenges in the long-term perspective. This is my view. You guys may have a different view. And if you do, leave it in the comments down below why you're bullish on Coinbase and why you believe Coinbase will outperform the crypto markets and these cryptocurrencies like Bitcoin. But I just think you're taking on a lot more executional risk for this company because the company has not demonstrated yet that they can lean off of their main source of revenue, and that's going to take time to show that can you even get 70% to 80%, lower it to 80%, 70% where it's transactional fees, and then you have other revenues starting to really ramp up. It's hard to see that right now, and it's hard for me to get to that point where that value is really there for this company. Again, this company may make about $2 billion this year. They had $800 million in Q1. But again, are they going to sustain that transaction fees? Are the other crypto brokerages out there not going to compete? And maybe even the traditional brokerages, if they add a crypto into their services, in their offerings, how is Coinbase going to compete on pricing? And so that it's very hard to really say that Coinbase is going to perform really well, even though it's dropped to $260 right now. I don't believe this company is going to do well in the long term. And maybe I'm wrong, but I want to make this call out there, and we'll see. Thanks for watching. Leave in the comments down below if you're invested in crypto, if you're invested in Coinbase. What are your thoughts on the company? Would love to hear that. Like the video if you can. Really that helps with the YouTube algorithm. And subscribe. We're getting a lot more videos up. We're posting 2 times a week. We had covered the FANG companies from SPACs, IPOs, all different types of investments we're going to cover. I really appreciate you watching to the end of the video, and I'll see you guys next time. Peace.